Hey traders, John Howell here. In this video, I'm going to talk to you about the reason why I believe we're getting very close to seeing another or the next leg down in this overall bear market. So let's get straight into it, guys. Do not place a trade based on what you see in this video because trading is risky and it can cause substantial financial loss. There's no guarantees of making money in the markets, and it takes you a long time to become a good trader. So be smart about the way that you're trading. Also, guys, very first thing in the description, if you're looking to learn an amazing trading and chart reading technique, my number one most powerful one, then very first thing in the description, click on that. I'm giving away a free training right now, teaching that, walking through in absolute detail. Now let's get straight into the video. One thing I want to share with you on this video here is why I believe we're getting ready for another leg down, and the next leg down may be even deeper than, maybe a lot deeper than the actual first one in percentages term. Now let me explain here. The first thing I want to explain with you, I want to share with you is if we look at the Dow Jones, we can see the Dow Jones, and firstly I want to share with you, we can see the Dow Jones on this chart here, right? We've had a high over here, right? We had a high, a lower high, a lower high, and we could be, right now we could be getting to some sort of lower high, and notice we're getting close to these areas of resistance where we are right now. See that there? So we're getting a lot of resistance where we are, where it is right now. So just a little bit more above this where we are, and we could expect some sort of a rollover. Now notice also this here, okay? Notice also this here. When we're looking at this market here, notice how we've actually had on this thing through here, notice how we've had, look at the psychology here. See that if you draw a trend line from there to there, see how this is see the psychology see how we've had strong sellers, and then we pretty much had weak buys. You know what I mean? Like we had a few solid green candles, but the rest have been pretty much like maybe one or two or three maybe green candles, and the rest have been pretty much small. See how we've had this strong sellers but weak buys? That tends to lead to that there in the markets. Same for the S&P 500 as well too. If we look at the S&P 500, we're getting very close. Let me bring on some trend lines here for a minute. But we're getting very close to this sort of. There's actually a resistance where we are right now, and just above it as well too. But notice the magnitude of the sell-off, right? So what I mean by that is, notice how we've had this very strong move down. Firstly, high, lower high, lower high. The market's selling off through here, and then the market's getting rallying back here. But notice how it's very weak, right? Very weak. And also on the Nasdaq as well too. Now the Nasdaq is, to me, the Nasdaq is getting ready for a big move on the downside. Now that's not guaranteed, so don't go start to buy put options based on what I just said there. Now this green line here, if you notice on this is the Dow Jones, this is the green line here. This is the S&P 500, this green line here, and also now I'll go to the Nasdaq, this green line here. That green line is indeed a major key area of resistance on my longer term charts from my yearly charts. That's right, my yearly charts. Now what that means is that there is a formation that's set up. I won't go into detail here because it'll take me a while to explain it to you, but know that on that yearly chart, there's a formation that sets up that's very high probability, and this green line is where there's a lot of areas of where the market's likely to pause. So this green line here on the Nasdaq has actually the yearly trend line, that major. Now that's an overall area where it's likely to find a bit of resistance. It's not the exact, it's not like it's 7,000. It's probably more like an area. You know what I mean? It's probably more like from here to maybe up through here somewhere. Makes sense? Because it's a yearly line, you're probably looking at an area, not just a line. But that line that I drew goes inside of where all this major resistance level is. See it through there? So we've had a big move down, and then we've had a nice rally back up again as well too. So that's the very first thing that I do see. Now, obviously when we're looking at our weekly charts, what do we see here? We see this market continuing down through here. This is the Dow Jones as well too. We've had a high, we've had a breaking of all these lows through here, and now we're getting now we're just getting up to this point through here. And so now we could be getting a rollover, and this could be heading back down now to the $18,000 level on the Dow Jones through there. Now, if we have a look at this is something I want to share with you here. I was looking at the ETFs here, and notice this here. I want to bring up the SPY, but they're all on all the indices here. And notice this here. Notice how And the volume really tells a story when you're trying to read the charts, right? Now notice this here. Notice how we've actually had, notice how from here to here, if I draw from trend line from there to there, notice how we had a few spikes, didn't we? We had a few spikes through here. And then as this market sold off, look at this volume. See how the volume started to rise through there? So the market sold off, volume rose. Then what happened is the market had a pullback and then the volume dropped off. Then the market sold off and then the volume picked back up again. Then the market had a bit of a pullback again, and then the overall market started to shift probably somewhere around about there somewhere. See that through there? See these two big volume spikes? See that volume spike really goes inside of that point through there. See that through there? So as you can see, right, big volume spikes, and then guess what? Then the market had a bit of a sell-off through here, and that was that sell-off through there. And see how we the volume decreased, right? Then we had a little rise, which was this point through here, and then we've had this big strong sell-off, and look at that volume rise overall from there to there, pretty much from there to there, from there to there. But notice one thing right now. Notice how we've had this drop and volume increase, and now we're getting a rise on everything I've just said there, and now look at the volume tapering off through here. Really, really, really interesting. And that tells me on everything I've just said there, we're now getting ready for something like this in the markets. Same for if I bring up the DIA as well too, right? You see it on the DIA, which is the Dow Jones ETF. You can see here that pretty much from this point through here to this point through here, that the volume actually picked up in its overall up. And then as this market's been rising very weak, as you can see, then we've actually had this volume decrease through here. Now, if I go and show you the QQQ, let's actually take everything off the screen here. This is the QQQ, which is what? This is the Nasdaq ETF. If I squeeze my chart, actually, let me open up a bit more. If I open up my volume a bit more, you'll be able to see the exact same sort of formations through there. What is that? We have this from top, then we have down from the bottom through here, and then as you can see, the volume rose through here overall. And then guess what happened? Then we had this bit of a rise, and now we've actually had this bit of a drop off through here. Makes sense? So that tells me that on the drops, the volume comes in, and then the pullbacks, the volumes get lighter. And you can see that all through here, right? Like look at this here. As the market dropped through here, volume rose. As the market ran up, volume dropped off. As the market dropped down, volume rose. As the market went up, volume dropped. And so on and so forth. Makes sense? Now, it's not an exact science, but when you start to see that you can see how the volume comes back in, right? And then there's a bit of profit taking, bit of a whatever, and then we start to see a sell-off. So this is the reason why I've put out this video today, because I wanted to share with you exactly what's going on right now in the stock market and what I'm seeing. And if we start to, once again, if we keep looking at that longer term charts, we can see how we've broken these areas, major areas of resistance on the Nasdaq. We're getting right to that area of resistance right now. Same for the Dow Jones. We're getting right to that area right now where we could be getting ready for a move back down towards the 18,000 level. Now, I don't know how long that's gonna take. It could be 1 month. It could be, it could be 6 months. And then also the S&P 500. But rest assured, guys, we have started the bear market. We have started the down leg. So any rallies in the market is likely to be sold into, and we're likely to sell this into. For any of you guys that have been following me for quite some time, I said it with Bitcoin and all the other markets as well too, is don't fight the market. What that simply means is, one, don't fight the market, and secondly, understand how the markets work. How does the markets work? Well, in a bear market, how does it work? We have a drop, we have a pullback. We have a drop, we have a pullback. We have a drop. What is this? A drop, a pullback. A drop, a pullback, and then a drop. Now, how far the drop is and so on and so forth, we don't know. So right now, please do not be fighting the market, okay? Please do not be trying to fight the market, thinking the bottom's in. Now, this is a blatant statement across the Dow Jones, the S&P, and the Nasdaq. This is not a blatant statement across all stocks. Heck, the mining stocks might take off. Stocks like GE that have been hammered for quite some time might be bottoming out right now and getting ready to take off as well too, right? So this is not a blatant statement across all stocks. It's just the Dow Jones, the S&P, and Nasdaq, and then obviously that's the analysis I'm doing here. But pretty much, if a good chunk of, if the market is going to start to sell off and start to crash again, then a good chunk of those stocks will actually start to pull back as well too. Makes sense? But this is not, oh well, the market's going to crash, so let me go short Amazon. I'm not telling you that. I'm not telling you to do anything, by the way. I'm just telling you what I'm saying right now. Always only trade the chart. And if the chart you're looking at, if that's the setup on that chart, then trade that. Don't go, well, the Dow Jones or the Nasdaq's looking really weak, so let me go short Apple. No, you've got to make sure that your setup is on Apple itself, and then trade Apple. If the setup's on the Nasdaq and that's it, well then trade Nasdaq, which means the QQQ. Makes sense? So there's a bit of an update, guys, on what's happening right now. Be very, very, very careful, guys, in the markets, because this is something I've been really, really, really honing on with my private clients, is that I've really talked to my private clients lately, which I do weekly coaching calls with, and I teach them my trading strategy, is I told them, especially in these environments, these volatile environments, people are getting chewed up like there's no tomorrow. I said less is more, especially right now. I said if there's no really good trading setups, then do not place a trade, because you are actually ahead by doing that. By you sitting on your hands and keeping your powder dry, you are actually ahead, because most people right now are getting chewed up like there's no tomorrow, and their accounts are getting demolished right now. I said, so if there's no really good quality setups, do not place a trade based on, what you think, hope, or fear. Wait for a really good quality setup, and if that means you have to wait a week, or have to wait a whole month, then then so be it. Makes sense? Because if like right now, I'm not trading a lot right now, but guess what? I'm up by default, because I guarantee you 90% of the people out there right now are getting their heads handed to them right now and getting chewed up. But I'm sitting back here being patient, waiting for the right setup, waiting for that A+ setup to appear, and then I will trade. For me right now, especially right now with all this volatility, it's all about being consistent, disciplined, and most of all, patient in the markets. And that's something I've been really, really, really driving home with my private clients as well. Now, I have just opened up a couple of spots, just 2 spots to my private coaching, which means you get my access to my trading strategy and also a weekly coaching call with me to help you get better at understanding these markets and understanding my trading strategy and how I trade the market as well too. If that interests you, I have just opened up 2 spots. There should be, I think it's the second link in the description. Click on that, go fill out the application form, and I'll give you a call real soon. So either way, guys, please be very, very, very careful around these markets, because we're about to see another leg down. I don't know if it's going to be today, tomorrow, or it's going to start next week, or we're going to go sideways for a little bit here. But over the next few weeks or so, we're going to start to see some big selling. We're likely to start seeing a lot of selling again in the markets. So please be careful, and please look after yourself.